Let's do it. So, we've all heard the famous stock market crashes.
Yes.
We've heard of the dot-com crash of the early 2000s, $6.2 trillion of wealth gone. The 2008 financial crisis, $8 trillion was lost.
We've heard of the individual companies collapsing.
Yes.
HIH in Australia, Dick Smith, WorldCom, Enron. The stock market and individual companies collapse.
Yes.
That makes headlines around the world. The recovery only gets covered in the back page of the business section.
Yeah.
But that's where the real power is. And this is the answer when people are worried about a stock market crash.
Yes. We're here to change things. We want the recoveries to be making headlines. But we have a story that illustrates the recovery. This is probably one of our favorites. And at a time when Ren and I were late in our high school days, and it was the 2008 financial crisis. One of the biggest American banks to collapse was Lehman Brothers. It collapsed on a Monday the 15th of September. Let's say that you invested in the overall US stock market on the Friday before the collapse. In the 6 months after Lehman Brothers collapse, you would have lost about half of your money, down 46% as of the 6th of March 2009. Makes sense. However, 10 years later, if you'd held on, you would have more than doubled your money, up 132% as of 12th of September 2018.
And I think that's not including dividends as well. I think if you include dividends, you get closer to tripling your money.
How good is that?
That's-
Did that
that's
make
just
the
off the
front
top of my
page? No.
And I think if you look at people that build big fortunes through the stock market, like living through stock market crashes is just the name of the game. It's part of investing long term, and it's part of the journey to building wealth. Classic example, we always go to Warren Buffett. How's this? He's the world's fourth wealthiest person, and he's lived through 15 American recessions, 1929 to 1933. Now we're kind of cheating with this one because he was born in 1930.
Yes, technically.
1937 to 38, 1945, 49, 53, 58, 60 to 61, 69 to 70, 73 to 75, 1980, 1981 to 82, 1990 to 91, 2001, 2007 to 2009, and 2020. Despite all of those stock market crashes, those American recessions, he's built a $100 billion fortune.
It's crazy.
It's just like the stock market crashing is part of the journey. It's not something to be avoided.
No. Now, there was a study done. It was the largest study of stock market returns. It was done by 3 professors, Elroy Dimson, Mike Staunton, and Paul Marsh. Now, the professors looked at returns after inflation and found that a $1 investment in the global stock market in 1900 would be $295 in 2000.
After inflation.
After inflation.
That's pretty good.
Yes. They also calculated the real 100-year returns of stock markets around the world. Now, some of the best, surprisingly, Sweden at number 1, 7.6% per annum, turning $1 into more than 1,500. Australia came in second at 7.5%, South Africa third at 6.8%, and the US fourth at 6.7%.
7.5% after inflation for Australia. Pretty good.
Pretty good.
Yeah. Now, the professors wrote, put this in a book, and they called the book Triumph of the Optimists, 101 Years of Global Investment Returns. The reason that they called it Triumph of the Optimist, the reason that we wanted to talk about stock market crashes to kick off the show today is because the stock market made investors all of this money despite plenty of reasons to be nervous. Every decade in that time period that these professors studied, there were catastrophic events. There were events that would have had investors fleeing for the exit and thinking, I'm not going to invest. It's not for me. I'm not going to take the risk. I'm going to put my money somewhere safe. The 2010s, the Spanish flu, World War I, 20s, Great Depression, 30s, the start of World War II, the 40s, the start of the Cold War, the 50s, the Korean War, the 60s, the start of the Vietnam War, The 70s, stagflation, the OPEC oil crisis. The 1980s, there was the 1987 Black Monday crash. The 1990s, the Asian and the Russian financial crisis. Every decade, there were catastrophic events. And every decade that we invest in the 2000s, there will again be catastrophic events. But the stock market grinds higher in spite of all of those.
Yes. So if you've just joined us for the first time, you're wondering what is going on with the stock market, why we have done a podcast for the last 7 years talking about it. This is why. The stock market crashes make front page news. The recoveries never do, but they're the most powerful part of the stock market story, that businesses just keep recovering. Stock market just keeps on churning away.
And the reason that we're confident it will keep doing it is because the stock market is just a reflection of, it's an amalgamation of collective human effort to come up with new products and services, new innovative ways of servicing people and giving people what they want, of business model disruption and technological change. It is just a reflection of the overall productivity of the economy in the world, and as humans keep doing what they're doing, the stock market will continue to do what it does.
Equity mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.